Hi everyone, Jasper Basson. Thank you very much for your energy. Thank you for your time. And this is a financial workshop I've done for Security Association of SA recently. It's a regular workshop that we do for them based on obviously financial information. And I actually thought to record this for everybody on YouTube as well, and just to get an idea of what we're doing and how we're trying to empower entrepreneurs in South Africa. So firstly, today, this workshop is not about me, it's all about you. But I think to give you some background about me, just to kind of set the tone of this workshop. My name is Jasper Basson. I'm an accountant, entrepreneur, or author, and I've been serving small business owners. I'm going into my third decade right now, and I have my own practice, Dryk Holdings, since July 2006, and also being an entrepreneur during that time. And my latest venture with one of my then clients is lead optimizers, where we generate niche market leads for other businesses and also joint ventures with them. And that's about since 2012-13. So I've been an entrepreneur, a great mix, being an entrepreneur and also being an accountant. So I believe that can prove a lot of value to a lot of entrepreneurs in South Africa. So just to cover a few of the ideas that I'm going to go through today, and just to ponder through them, is powerful ideas to ponder on today. Employment tax incentives. I'll run you through probably one of the biggest tax hacks that we may have in South Africa. I'll run you through the VAT administration and to make your life easier, because I think that's something that most entrepreneurs struggle in South Africa, is to administer their VAT. Looking at the business and personal split, how you can do that properly. Strong sales administration. I always say any business starts with strong sales and ends with proper administration. And then also, if you hang on to the end, I've got some bonus ideas and also some bonus gifts I want to give you if you hang tight and run through this whole video with me. So let's get started. I'm excited to run through everything with you. And if you have any questions, any remarks, any ideas of future workshops and items I can put in future workshops, please put that in the description below. It doesn't matter if it's YouTube, Facebook, doesn't matter where it is. Please put that comment in there. I would really love to see that, and also obviously we can work according to that for future workshops. Right, like I mentioned, employment tax incentives, ETI in short, it's probably the most overlooked tax hack that we may have in South Africa. It's all about employing young staff in South Africa, encourage employers to employ them, and the requirements for that is it must be ages between 18 and 29. The salary must be under 6,500 rand per month. It must be a full-time employee, and also they need to have a valid South African ID. Right, so that's the requirements. Practical, how do you go about that? So everything is linked to your pay-as-you-earn reconciliation, your pay-as-you-earn return every month. So what will happen typically? Let's work on March. So I close off my weekly bi-weekly or was like fortnightly or my monthly payroll for March, and then by the 7th of the following month I need to pay obviously the pay-as-you-earn UIF SCL over to SARS. So what will happen is with ETIs you get on average 1,500 rand per employee, per valid employee, that you can get as a tax credit. So it's an actual tax credit that you can deduct against your pay-as-you-earn. So let's say you have 1,500. Well, it's 1,500. Let's say you have 5 employees. So you can take the 5 times 1,500 and then deduct that from your total payroll, total pay as you earn that you need to pay over to SARS by the 7th of the month. So let's say your bill is 20,000 Rand. You can deduct that 5 times 1,500 on the bottom before you submit that return to SARS, and you only pay the difference of that amount. So it's an automatic tax credit that you can get in the same month that you employ the people. So massive tax hack, especially if you, like in this instance, I've done this for security entrepreneurs, security small business owners, and they potentially employ a number of people. You see it in all kinds of manufacturing or labor brokers or all those kind of businesses where you employ a number of staff. Cleaning businesses, if you have a cleaning business, you potentially have quite a number of employees that works for your company. That works very well because potentially you can have a massive amount of employment tax incentives, ETIs, that you can deduct from your pay every month. So, like I mentioned, big tax hack. Look into it. Reach out if you need to understand more about that. If you believe that your business can also benefit from that. The next thing I mentioned, VAT administration. It's only so much you can do regarding VAT. You have invoices that you raise to your clients that you add your 15% on, and you have your deductions with various expenses, and certain of those expenses you can allocate VAT or deduct the VAT from your VAT raised from your invoices. So there's not a lot of movement that you can do. It's more about understanding VAT, and then secondly, how do I allocate it properly and do the proper administration for the VAT, and make sure that I have enough money for the VAT for every second month when I need to pay it. So before we get to the administration part, let's just look at the concept of VAT and how VAT can actually benefit you if you do it correctly. So let's say I need to raise an invoice for fees rendered or a product or whatever the case may be for 100 Rand. If I'm able to add the 15% on top of that invoice of 100 Rand, then all the expenses that I can deduct, the VATable expenses, would be a bonus, because I'm like a trust account. I'm just an agent for SARS to collect that 15% from the client, and then I can deduct all the VAT on the various expenses and then pay the difference to SARS. So I think that's the very first calculation that you need to do, and just kind of deconstruct the way you currently do your invoicing. Make sure that you actually add the VAT on top of the invoice, and then if you can do that, and if you do that, then you will only reap the benefits of the VAT. Even though you might pay at the bottom, it would be invoice less the expenses that you actually get a deduction for, and then you pay the VAT. So you actually get the benefit, and you're just the agent for SARS. Right, so how do I make sure that every 2 months I need to pay over the VAT to SARS, so I actually have the money available? My suggestion, very simple idea, I will tell you in a moment what I do, but for the most part, create a call account that you link to your business account. So you create a call account that's in the name of your business, and you ask your business banker to link that call account to your business account. The second thing that you need to do is work out the percentage of turnover to allocate. So that would be typically the full percentage that you get from the client is 15%. But if you're in a manufacturing or in a retail kind of business, you also have cost of sales, which can have a big number of the VAT buried into that. So if you calculate what would be, and you can use your previous month's management statements to accurate or very accurately estimate at least the amount that you need to allocate. So 15% less potential VAT on cost of sales and potential VAT on all the various expenses that you can deduct. And you work out an effective tax rate that you need to deduct on a weekly basis to put into that call account. So once you have that figure, you can transfer on a weekly basis. So you will take, let's say and the key is consistency. So either take a Friday and take that VAT for the whole month or for the whole week from Monday to Friday, and you take the VAT on that lump sum. You basically take that lump sum that you get into the bank times 15, divide by 115, and you take that amount and you put it into your call account. The guys that actually start doing that on a weekly basis and very, very consistent with this, they found that they actually have surplus funds at the end of the year available in that call account. And the reason for that is if you don't work on the effective rate, as I've mentioned previously, and you're only working on your 15% as you get your turnover in, then obviously you have the deductions, 15% less all the various, so your expenses, so your effective rate might be only 10%, but only not 15%. So you will potentially keep that 5% VAT that you would have paid over to the call account. You will have that left in that call account, and obviously accumulate as it goes along. So something very very helpful to make sure that you have always that VAT available, because what do most entrepreneurs do? They get the money into the bank account. They need to do certain projects, this and this. They need to have certain expenses, and when they get to 2 months later, when they need to pay the VAT, they don't have the VAT because they struggle to keep record and budget for everything that they had to do. So this is a great way of putting something in the pocket and say, this is my VAT money, I need to keep it for that. And you can do similar things with all kinds of other expenses that you need to make a provision for. Something like bonuses at the end of the year. You can work out the bonuses over 12 months or 11 months from the beginning of the year, divide by 11, and that amount you can, again, a separate call account, put a separate call account and allocate those funds to that specific account every single month, that you know at the end of the year you have obviously made enough provision for your bonuses for your staff. Right, I mentioned that I don't really use the call account. I do something else, and this is a step further and will actually start helping you growing your wealth even better. And that is to rather take that money and transfer it, link your bond to this account and transfer your money into your bond account, again, on a weekly basis. What's the magic in that is, first of all, just make sure, please, that your bond do have an access account, that you will be able to access that fund immediately when you might need, or when you need it to pay the VAT. So that's very important to note. But then from there, every week, same as the call account, you link it and you pay and you transfer it over to that bond of yours. Why is that? That's magic, because your loan account, your interest on your bond are being calculated daily on the outstanding amount that's in the bond at that stage. So especially if you have a big VAT that you need to pay every single month, if you start paying over those funds every week in your bond gets less and less and less over that period. You start paying less interest for that specific period while the funds are in the bond. And when you do the actual bond installment every month, you will pay a lot more capital on your bond, because the interest is a lot lower than it used to be, but your bond is still the same amount. So now the difference is purely capital. So, and then obviously when you transfer the funds back into your account, it's back to the normal loan account, and you start the process from over and over again, but you already paid some additional capital over. And this is a snowball effect. The more you pay, and the more you do it on a consistent basis, the quicker you will actually repay your bond over a period of time. So I hope this administration works. It's very simple. It might sound complicated right now, but just open your call account, just to start doing that from today, and you will see the difference when you start doing that. And it's actually quite simple. The second thing that a lot of business owners and entrepreneurs do, I see it with my own clients as well, is they don't split their business and personal account. And I'm going to give you the example, and you can reflect if that is you. And I don't criticize. I just want you to reflect on this. So you have your business bank account, you have your personal bank account, but you have a business bank account, and that business debit card or credit card, whatever that might be, that you have in your wallet. When you get to the shop, you swipe that for personal use. You swipe it for all kinds of items as you go through your weekend, through your week. That's not business, but it's all private related or personal related. By doing that, you will have no control over the amount of money that you spend from your business account. I always laugh at clients when I tell them about your annual takings from the business was about R1 million, and so it's about 83,000 rand per month, and they would laugh at me. It's like, there's no way. I mean, so there's definitely something wrong. You must recheck that. And then I open the spreadsheet in front of me, on mostly these days on Zoom, and I go through each transaction with them, and they start like, it's like a aha moment. It's like, I didn't realize how much money I spent on a monthly basis on my personal items through my business. Why is that important? If you want to start building wealth, you need to control your expenses. You need to accurately control your expenses, that you know exactly what you do with your money, and obviously, etc. So, and the second thing, you must see, I mentioned at the bottom there, the biggest reason most people's net asset value does not increase is because as their income grow, they increase their lifestyle. So what do people do? They don't have control over their business funds and potentially their personal funds. So they've got no control. They've got no idea. They might know the income, but they don't have any idea of the expenses. So now they only see the income, and they start living a better life. And now they want to start purchasing a new or better house. They want to start buying a new or better car. And nothing wrong with that. I don't criticize that. Nothing wrong with that. We all love beautiful things. But we tend to overextend ourselves when we don't know the extent of our personal and business budget. So my philosophy around it is always, if my business net profit is 50,000 Rand, I always need to make sure there's always a surplus. If I want to buy something else, if I need to commit to something else, I need to make sure that there's always additional surplus available, that there's always space to, if your income decreases over a period of time, like we've seen in COVID. I mean, that was a massive eye-opening for a lot of people. Any situation like this, which is in effect was a recession or potentially even a depression of the economy, and it will always happen. I mean, you always need to look at the economy, that it will always go like this. It will always be expansion and recession, expansion and recession. We will see potentially again now in the near future, in the next year or two, the interest rates start turning around from the bottom. So it will potentially run up to a certain point, and then it will turn around. And once it turns around, it will generally come back again and go into the bottom again. But at this stage, it turned around. So now every single time we have a meeting, the interest rates being increased. by doing that, you're sitting potentially with a bond of 10,000 rand, and before you know it, in a year or two, you're sitting with a bond with 15 or 16,000 rand. I recently sat with a client, and they're busy with a bond application. They want to get a pre-approval that we assist a lot of our clients with. And while doing that, he mentioned to me that his monthly repayment, according to his calculation, would be 18,000 rand. Now I told him, well, yeah, you're 100% correct. Currently, your repayment would be 18,000 rand a month. And then I ran through a few figures. I told him about, let's just go, if the interest rate go about 5 or 6% higher than it currently is, and which is highly likely in the current economy. And I think it worked out on something like 26,000 rand, 26 or 27,000 rand. And he was like, I can't afford that. So, and then I told him, well, if you buy a property right on that limit, there's a big chance that you're gonna have a massive debt problem in the very near future when you buy this bond. And that's a problem with increase your lifestyle when your net asset value, or your business increase, or your income increase when you increase your lifestyle. Your net asset value is your assets less your liabilities. That's the thing that you really want to increase, and it's something that you build slowly but surely over time. I actually thought about when I was preparing for this workshop, I was thinking about this whole concept of building wealth is not sexy. Building wealth is not sexy. It's been boringly consistent. Building wealth is not sexy. It's boringly consistent. So it's a principles that you do every single day. It's not that thing that you do once in a while that grow your net asset value, that builds your wealth. So let's get back to the point of business and personal. What is my idea for you today is go and work out. If you don't have, if you feel uncomfortable of doing that, ask your accountant to assist you with that as well. But work out the budget for your business. That you all go look at the history of what is my turnover and what's my expenses. So the real question is, what is my actual net profit per month? That I know what is available in my company. And the second thing is, what is my personal budget? What is the takings what is the income that I need to get from my business to my personal account that I can pay whatever I need to pay on a monthly basis? So, and you might be shocked when you get that, like I mentioned. But the idea where we want to get to is, you want to transfer on a monthly basis from your business to your personal capacity, your salary. You need to see yourself as an employee of your own company. Just remember, it's two separate legal entities. It's your company owned separately, whether it's a company, a trust, or whatever the case may be, and you have your personal name on the other side. You have to get to a point where you transfer a salary from your business account, being on the payroll, the same as any other employee, and pay yourself a monthly salary. Part of the salary is you're on the payroll, you pay your UIF, you pay your pay as you earn. Only way that you're going to split and grow your capital is when you start being very disciplined on doing this. So, and now I'm going to practice, like I mentioned, I'm going into my third decade right now. I've heard all the excuses, and the biggest one is, I can't afford to do it right now. I can't afford to start paying myself a salary because I've been living from my bank account. I've been swiping my card, and I can't do it right now. So the solution for this is, see yourself as a weekly wage. Put yourself on a weekly wage payroll. Start paying yourself weekly, that you know you have a specific amount every single week that you get into your bank account. So that's a good start for you. You're on a payroll, you pay as you earn, UIF on a weekly basis. And then once you get accustomed to that, once you are adapted to this idea of being on a payroll, I get some frequent monthly and more better chunks in, then you can start putting yourself on a fortnight or bi-weekly payroll. Now you get not a weekly wage, but you get bigger chunks every second week. And then obviously the last step would be, right, I'm used to this concept now. My cash flow is better in my personal capacity because now I can, and from my business because now I'm more structured, and now I can actually pay myself a monthly salary on my business. So this doesn't mean you can't take potentially more from your business during the course of the year, but it's a more structured way where you can say, this is my monthly salary, and now every 3 months, every 6 months, or once a year, I declare a dividend or an additional bonus to myself as part of the payroll. And now I can control my finances in my business account and also my personal account. So I hope this idea helps you. Again, reach out to your current accountant, reach out to me if you want to assist you. But it's something really important if you want to build your wealth, really important to look into and to start doing consistently. Right, something very exciting for me, and through this process, obviously with sales, it's still finance related, but it's a bit off financial advice topic maybe for this webinar or workshop, but it's still very important to run through. And like I mentioned, most businesses fail because of two core reasons. The one is not enough sales, and the second thing is, once I have a lot of sales, it's poor administration. So the most entrepreneurs that I know, they're very good salesmen. They can sell you anything. So they get a lot of money into the business account, but they can't do proper administration of their funds. So a lot of those funds just kind of simmer away or cipher through going through the surface, just kind of disappears through the process because they don't have proper administration. They don't stick to the rules of the previous one or two slides, previous two things I've mentioned. So, but I'll run you through all of these ideas in a moment. So, first of all, sales and marketing. Sales and marketing, there's a difference between sales and marketing. Just to excuse me if you already understand this, just for the people that might say, well, sales and marketing is pretty much the same for me. There's a massive difference. Sales is the actual sales that you make from leads that you generate, from people that contact you. So that's the actual, when you actually monetize something that comes your way in the form of a lead or a referral, whatever case may be, and the actual cash is in your bank, then it was a sale. Before that, even if there's an invoice raised, it's not a sale yet. You haven't received the money yet. The sale is only when you actually receive the money in your bank account. Marketing is getting myself out there. How do I generate the leads and the referrals to get to me in order for me to potentially make a sale? So, and an interesting fact, I mean, from Lead Optimizers, we do lead generation on specific niche markets, a specific thing. So I'm just giving a random idea that's coming into my head. Let's work on a niche market idea or niche market word, VAT registration. So when I build a funnel where I get VAT registration leads in, so it's only VAT registration leads, people ask for that service. They ask to be helped for a VAT registration. The best lead to sales ratio that we could get on niche market leads was 30%. 30% of people that said, I'm really interested in your service, I'm really interested, I need this, it will only be able to convert, well, from my experience, 30% of those sales. So it's a process of getting people from where they are to the actual sale, to the actual cash. So two ideas. You've got the long-term approach, and I definitely would advise, and I run you through it now, and also short-term approach. That would be your long-term would be building the brand of the company. Short-term approach, I need sales right now as well. So it's kind of, it works together. But the long-term approach is adding value and not just making marketing banners. You see so many, I mean, and again, I'm just going to use accounting as an example because that's also in my field and field of expertise as well. You see accountants have these banners. This is us. We do annual financial statements. We do VAT registration. We do whatever. You don't add any value by doing that. Why must any person? How do you differentiate yourself from being the accountant just around the corner as well? Seth Godin, I really love Seth Godin's books, but one of his books is The Purple Cow. And the whole idea of the purple cow is when you, I'm staying here in Wellington, and so obviously we have a lot of farms around us. And when you drove through a farming area, and the very first farm, they've got a number of cattle next to the road, you might stop and say, well, this is amazing cows, and wow, and look at these cows. And by the second, third farm, you're bored about the same, seeing the same kind of cattle every time. So then you start driving past all the various cattle, all the various farms. But all of a sudden, there's a purple cow standing on this farm, and you immediately turn your head and look at this purple cow. You will stop. You will potentially take a photo to send to somebody to show them this purple cow. So why is it important? Because it's exactly the same in your business. Why would you attract any person from the crowd if you are vanilla? If you only put out vanilla content that's exactly the same as the next person, as the next accountant, why are you different from the other accountant? It's your approach. I'm starting selling or telling my story to the world. My story is different from the accountant next door story, and you might resonate with me, and somebody else might resonate with the accountant next door. But that's both amazing because we live in an abundant world. There's place for everybody, and that's the amazing thing about this universe. There's enough for all of us. I don't have to be jealous or nasty or whatever the word is, what you might think of right now about the person around the corner. You can be absolutely, you are born in abundance, into abundance. Start living that. Start living your truth. Be your purple cow. Because God doesn't create extras. There's only one of you. Start living that truth. Don't try to be a copycat. Be authentically yourself. And one of my clients, it was actually a mentor for me as well during that stage, many years ago. He always told me, don't chase after clients. Let them chase you. The moment you chase a client, you can't negotiate price. The moment a client or person chase you, need your attention, you can set the price. So find ways to attract over chase. Very important point. And the second idea is building brand over marketing. It's exactly the same idea. You need to build your brand based on your story. Why are you unique as an accountant? Why are you unique in whatever else you are doing? It doesn't matter what you are doing. You are amazingly authentic, unique. You are created like that. Start living that truth. The quicker you start living that truth, the quicker you will see abundance and magic start appearing in front of your eyes. And then just lastly, on long-term approach, always looking at ways to create solutions to problems. The biggest way to build wealth is finding solutions to problems. I'm living in South Africa. If you're watching from overseas, we are probably a third world country if you want to look at us like that. But there was never so much opportunity in South Africa as right now. There's so many problems that you can find solutions for that you will probably don't have enough time to solve all the problems in this world. So start opening your eyes about, I mean, you can look at the news and only see the problems and you get depressed, or you can spot each and every problem and your mind can automatically think there's a solution to that. Just keep on living your truth. Be aligned with your own purpose. So don't get distracted with all the opportunities. Be very narrow and focus on your purpose. And then I love the saying, and it's so true. When you win, I win. It's never either. It's not me win, me win, me win. If I only chose money, that's all I would see is me win, me win, me win. But when I win, you will win. And more importantly, when you win, I will win. So I always live that truth is how can I let you win? Because if you win, I will win as well. If I save you money, obviously I will win during that process. So that is your long-term approach, building brand. During the process of building brand, you attract new people to you, and you influence the people around you, and you also attract and getting word of mouth from the current client base. Short-term approach, I think most people potentially at least heard about lead generation and digital marketing. It can be two different things, or it can be exactly the same. Digital marketing would be getting leads on a specific niche from Facebook, Instagram, the new trend, TikTok, and also, so there obviously with that digital marketing, you will very target a very niche market, a very specific person to buy from you, and lead generation can be exactly the same. It can just be more kind of a sales funnel that you work. I like websites, so it's niche market websites on the one side, because content I create today will stand potentially the test of time. So it's something I create today, but something I can get leads 10 years from now based on the content that I've created today. And the same with something like YouTube. It allows you to create video content as well, something that's more likely to be watched and seen, and content being used by the public and potential clients out there. It's again, YouTube is a constant drive. It's a constant, like a website. So you create content today, and I can get sales from this content 5 to 10 years from here. So what's the best way to do that is through your website and through your YouTube, create funnels of lead magnets. Create lead magnets that you give somebody something for free. Again, add value first. I give you something. When you win, I win. When I give you something, I get an email or contact details in return, and I can start obviously sending you some information about us. I can send you some more information, more value add, and also when I have something to potentially sell, you can be the first one to know that as well, and I can obviously be in touch with you. So yeah, just very short on that. I think that's very important to look into. And then so now, once we've mastered the marketing and sales part, and we actually get some cash into the business, now we need to start making sure that we allocate these cash that we get properly. And also, obviously, it's easier said than done, because there's all various kinds of variables in this. But I always mention there's 4 items that you really need to have your eye on weekly basis, potentially a daily basis. You need to have live figures on this, and there's your cash balance or your various cash balances, your accounts receivable, your accounts payable, and if you work with inventory, your inventory or your stock, that management. So how do I do that? Well, I'm an ambassador for Sage Accounting, so obviously that would be my first accounting package that I would suggest. But there's Sage Accounting, there's Zero Accounting, there's QuickBooks, there's Palladium, and a number of other ones as well. So you get the old school on my desktop version, where I need potentially a server and everything, and then I have the modern way of cloud accounting. So my server is actually in the cloud. So the great thing about that is I can work from any place, from anywhere, as long as I have internet connection. So I can log into my system in the cloud, and that same system, which is on the cloud, my accountant, I can invite my accountant as well, and he can work on it as well. If I have more people that need to work on this, I can add a few people, and they can all work from the cloud, from their own laptops. They can just work on there. So, and this new, and excuse me for saying this, but it's the best way to get this over to you is all these modern accounting packages that we can use. It's accounting for dummies. It's those programs have specifically been written with the entrepreneur in mind, with the small business owner in mind. So just to give you a quick example, typically in accounting we would have debit and credit. In this modern accounting systems, you have increase and decrease. So for you understand the concept of increase and decrease a lot better than trying to figure out what is a debit and a credit. So it's been written for you to make your life easier and obviously do the administration a lot quicker. So you can, for most part, on this new accounting programs, you can automate the process of being able to get figures very quickly. You can do something like recurring invoices, which go out on a specific date every month automatically. You don't have to even touch anything. You can lie in your bed and it will go off automatically. You can pull in your bank statements on various ways. The old school, you can still do the old school. If it's really something that you want to do, you can capture everything via hand. The second option is on the internet banking, you can download a specific function. They call it the OFX function. That bank statement then gets pulled into your accounting system and it's automatically already there. So you just need to allocate and map those specific expenses. The great thing about that is once you've mapped Telkom as telephone account or Vodacom as your telephone account and confirm that it is back on that transaction, you can actually create a rule, a mapping rule to say every time I pay Vodacom or Telkom, that must be allocated to telephone and there must be VAT on. So every time going forward, once I've done that, the system will automatically throw new transactions to that specific account. So once I get through this process, for the first month or two, you'll start to create rules. From month 3 onwards, you will potentially pull in the bank statement and everything would be allocated very closely. And the same with obviously with debtors. If somebody pays me on a weekly or monthly basis or regular basis, I can allocate that specific client to that customer code account. And every time it comes in, it will automatically send to that. So I can very quickly pull in bank statements and send my data statements off to my clients on a regular basis. Right, now that I've bored you with all the accounting ideas, the last thing that I would just suggest as well, and I'm not going to go into depth with that right now, but I have a strong debtors management. So like I mentioned before, when you send out an invoice, you haven't really done a sale as yet because there's no effect until the actual cash is in your bank. So the only effect is my assets as a debtor increase, my sales and my as a book entry on my books increase, but my cash balance didn't increase. So there's no cash in the bank yet. So there's no guarantee that I will actually get the money to do anything with that. So strong debtors management, very important. I've done a video previously as well. That's something we can look into again in the future. Right, like I mentioned, I've got some bonus ideas for you as well. I think it's something I just want to run through you. It's something that we can go deeper in future videos and future workshops. But getting your break-even point is very important. Every business do have overheads, potential cost of sales, and you need to understand what is the amount of sales I need to make every month purely to break even, including my own salary. So what's the easiest way to do this? I'm just gonna for this example, just gonna work on a consulting kind of business. I'm gonna not assume that you don't have any cost of sales. But for this exercise, you would need some historic information, preferably that you know exactly month to month. This is my management statement. This is my expenses. I can even, and I must add my capital repayments as well. So if you have vehicles that you use for the business, that's an hire purchase. You need to add that as well. Anything that you repay on a monthly basis for your business, that needs to be included in this management statements for the purposes of this exercise. Right, so I will go back to my history. I will look at my monthly operating costs, including these repayments, and let's say it's 100,000 Rand on average. Then I know, because I'm a consulting business, because there's no cost of sales, I know I need to fee 100,000 Rand per month. I need to make 100,000 Rand worth of sales every month purely to break even. Then at least I know if all the money actually comes into the bank, I can pay everything. So this is the least amount of sales I need to do. But obviously you don't want to do only the minimum kind of sales or just try to break even. You actually want to make a profit. I mean, you're in the business to make a profit. That's not all it's about, but that obviously is important because otherwise you can't grow your business. So once I know my break-even point of sales might be the 100,000 Rand, then I need to add additional meat in as a profit. So let's call it 150,000 Rand. So now I know if I make when I do 150,000 Rand worth of sales on a monthly basis, then I know my average monthly overheads, including my repayments of my debt, is 100,000 Rand. So now I know once I've done 150,000 Rand, I make 50,000 Rand net profit per month. Why is that important? Now I can start building wealth on a monthly basis by obviously allocating some of those of my net profit to specific investment of choice. Next thing, building passive income legs. Every business do have an option of a passive income leg. It might be affiliate marketing where you affiliate connection with somebody. Once I refer to somebody and they make a sale, they give me something back, kind of idea with that. Your second idea would be taking your current business and then also see if you can do a retainer kind of fee for that client. So look at the average spend per year and then build in by signing annual contract with them, annual agreement with them. Try to keep that as a monthly retainer fee for you and your client. Something in services that can be very easily done, but also in all kinds of other things. I mean, if you're a plumber or electrician, work with somebody to do a monthly checkup of all the things at the business. If you're a cleaning business and the business used you once, suggest something that works for both of you, that you can do a retainer kind of fee and make sure everything has been cleaned or pest controlled or anything like that. So there's so many angles that you can use in your current business just to get passive income for the business, and also then start getting additional people in your niche market, but just out of your field of expertise. Once they use them, you get something back. I think that's very important because that's passive income that you get as a cherry on top. So now, your break-even point is 100,000 Rand, but now maybe your passive income starts generating 50,000 Rand extra a month, which makes that additional amount that you can get in, which you don't have to work for every month, but can start working towards building your wealth for you. Another idea, all of the business streams of income, is it actually profitable? So you see, especially this with a lot of small business owners where they have various sites that they need to work on, various projects that they need to work on. So it can be construction or it can be labor broking kind of. I'm just thinking about a few ideas that I can think of right now. But there's so many. I mean, you would know if you have various projects that you work on frequently, and once you do something like that, it's very easy if you have 10 projects that 3 of them might potentially not be profitable, or even worse, you need to pay into that. So how do I do that? I really go deconstruct my whole business and to allocate my income and expenses for each project on its own separately, and also work in my vehicle costs, traveling costs, and your depreciation on everything on that. So once you have that, you will have a clear indication, and I've seen it a number of times. Some people just they have these projects, it's great, and then they have these few clients that's only there and because they see the turnover coming in, but they've never done the calculation. They actually quoted just to get to work and not to actually make a profit. So once you get that picture and deconstruct it and see, well, 3 of them are non-profitable or I'm making a loss on it, even worse, and this side I actually make a profit, then I can start deciding what can I do on this side to actually make it profitable, and be bold enough to either fire that client if he doesn't want to work, or get him to increase your fee. Increase your fee with, let's say, 30%, might be a turn off for them, but it would be great for your own business. And you can't, I mean, to take that, I mean, being a business is a risk, and to take a risk with 3 projects that you actually make a loss on doesn't make sense to me. Even if you have whatever reason you might have, it doesn't make sense. And next point, expansion is more important than cost saving. So, and I'm very focused on cost saving. I've done a whole spreadsheet for myself. Especially in our business, we have various kind of businesses attached to one brand, and I need to always do a costing for the various companies together to see and to allocate specific expenses. And obviously during that process, you look at cost saving, you look at cost allocation, etc. And that's something I do on a quarterly basis. I run through everything, make sure everything is still on par. Do I still need this? Do I pay too much here, or do I need to maybe add something else? Whatever the case may be. But that's a core exercise. It's something I now do very quickly because I have my whole structure and spreadsheet going, so I can just put in the figures quickly and I can get an idea of my costing, if it's still on par or not. Obviously once a year I do a proper exercise, but every quarter I just do kind of run through everything and make sure we're still on par with everything. But you can only do so much with cost saving. Cost saving can only get you so far. The more important idea is expansion. How do I expand my business than against cost saving? Expansion is always better than cost saving. With expansion, there's generally no limit. The sky is not even the limit. There's no limit at all. The only limit is in here. So take some time. Most importantly, if you work on your business and not in your business, then you will be able to find time to expand and find ways to expand. Be innovative, be creative in your business to expand your business. And then very lastly, your accountant is a wealth of knowledge and connections. They always say, you are the average of the 5 people you spend the most time with. One of those people can be your accountant. Your accountant's got a lot of wealth of knowledge because he potentially work with a number of various small business owners in a variety of fields. So he do receive a lot of knowledge from these various angles. I always say that I want to add as much value to my clients as possible, but they in return also add a lot of value to me, because they also teach me a lot of lessons, good or bad, but they teach me a lot of lessons. So tap into that, use that. Something that we do in our accounting practice is I do pre-bookings with my clients. So for the next year, my client knows exactly when he can see me and when he will see me. You can obviously see me other times as well, but there's a preset date every quarter that we exactly know when we will see each other, and it's a space that we create, obviously to go through the financials and go through financial information, but also creating that space of brainstorming new ideas, great brainstorming better structures, great brainstorming connections with other people. You see, that's in my next point there, but connections with other people. Your accountant's got that wealth of connections because he's working with a number of people. So the more you spend time with him, the more you potentially will be connected to somebody else. And it's kind of I create that open space for brainstorming with my client, and then something just spark, and it's like, I need to connect you with that person. It's something I haven't thought about, but I was not creating the space with you. So very important. If you don't, contact him as soon as possible, create that space. It's not always a space that you might enjoy because you need to grow during that space, but take that time and spend time with your accountant. As appreciation for the day that you took some time, and it's a long hour to focus but to appreciate your time and your energy that you gave me today, I want to give you and send you my latest ebook, Business Growth Kit for Entrepreneurs, the financial edition, which is a lot of the things I've covered today is also more in detail in that ebook. I really want to send that to you. So reach out, send me an email to that email address, send me a WhatsApp to the number, and I will be in contact with you, and I will send you that ebook absolutely for free, just because you took the time today. It's generally on sale, but I will send it to you for free for your time and energy today. Thank you very much. I appreciate you, and I'll speak to you in a future workshop. Bye-bye.